Games Corner is a unique console-based gaming experience with 3D and LED screens, all within a comfortable atmosphere. Become a Games Corner franchisee now and bring this one-of-a-kind opportunity to your location. For more information, visit us at gamescorner.com.
Hi everyone, this is Ahmed Kremli and welcome to Be Efficient TV. The mission of this web TV show is to boost the efficiency of your business and life through tips and tricks from leading experts. And today I have with me Swatick Majumdar. He is the managing director of Dev VC. He is an expert in investments and startups with focus on entertainment and technology. Welcome to the show, Swatick.
Thank you. Thank you very much, Ahmed. Great to be here.
Pleasure. So Dev is what?
It stands for Digital Entertainment Ventures. It's a US-based early stage, seed stage investment fund that invests primarily in the digital media space.
How did you start in the investment world, and what's your background before it?
Well, let's start with the background first and then see how that evolved. Well, I'm originally from India, where I did my master's in applied economics and started working and operating a logistic freight company that was run by my father, which I managed successfully for quite a few years, and then came to the US to pursue further studies, got my master's in science, in computer science and systems and business strategy, and thereafter just landed on Wall Street in sales and trading. Yeah. And one thing led to the other. I started investing in startup companies in the biotech industry first, and then later in tech companies, and then underwrote many of them, exited via IPOs, initial public offerings, and then went and worked on the advisory side for mainly cross-border transactions between India and US. And then finally decided to set up my own fund to invest in startups, as New York had started showing, compelling reasons why startup funds were needed. And at that time, I met one of my current partners who asked me to join the fund, and I jumped at the opportunity.
Which is the same one, digital development.
That is correct, which is Dev.
All right. And do you still invest in the stock market, or you like investing in startup more because it's both totally two different worlds?
Yeah, well, I invest personally in the stock market, but Dev does not. I mean, that's not the mandate for Dev. Is purely a fund to invest in startups. But most of my investments, personal investments now, are in startups as well.
When you invest in the stock market, you are a speculator, or you invest for long term? And how do you compare it with the business investments? Because in business, you have more control. You can call the CEO or the founder of the company. You can change some decisions, while in the stock market, regardless how much you know about it, still you are not in full control.
Yeah, well, it depends which stage of life you are in. The stage of life I am in, really, I don't really speculate too much. Earlier on, when I was younger, speculation was the name of the game. So now you're right. Startup is something that I focus on as an individual as well as a fund because of just the creative process. As well as the control factor that you spoke about.
How a VC company raises capital for investments? How it works?
I'm sorry?
Yeah, how it works? How you raise capital as a VC company?
Yeah, they usually seek out people in their circle of friends first. Expand expand their Rolodex. Thereafter, and to other networks, and it just grows from there. Fundraising is an exercise which I call of 3 Ps. Process, patience, and persistence. You have to be tenacious. You have to be a person, or you have to be a group that stands by the principle, by the course of the action is determined. And that's the most difficult part of the VC exercise is the fundraise. But once you prove yourself, then the subsequent fund and the fundraising process becomes much easier.
Usually, like the VC partners, they invest project by project, or you first raise capital, certain amount of capital from each one of the partners, and then you start, investing in different startups. How usually it works, or it works both ways?
You can work it both ways, but primarily a VC would raise a pool of money and invest based on certain principles, based on certain strategy, based on certain mandates. You just don't raise capital and just invest all over the place. Just the very fact that you are a venture capitalist, which means you're taking the maximum amount of risk. Because of taking the maximum amount of risk, you need to mitigate some of those risks, and the way you do that is follow a very strict mandate, follow a very strict strategy as well as principle.
The strategy means focusing on, let's say, certain type of companies, or let's say.
It means a whole lot of things. Broadly speaking, it could mean industry segment, geographical segment, size, stage of investments, certain entrepreneurs that you fund, certain entrepreneurs you don't fund. Those are some of the strategies that look at. Plus, you also look at strategy from the industry point of view as to is that company or is the entrepreneur trying to disrupt a certain industry? Does that industry need disruption? So those are kind of strategies we look at.
What's your focus now as dev?
Well, actually, earlier on you mentioned you introduced me as a managing partner, and I just wanted to kind of update that. I just transitioned last week from a managing director position of Digital Entertainment Ventures to a venture partner. And again, what that really means is it's essentially the role you play within the fund. As a full-time partner or a managing director, you undertake, daily operation duties, involves administrative, etc. And you spend 100% of your working hour on projects related to the fund. Whereas as a venture partner, it allows you the luxury to work outside the scope of the fund. And therefore, we decided on a transition based on the path, that dev.
So the managing director means the one who selecting the investments and works on them, and the venture partner, the strategic person in selecting these things.
No, not necessarily. Both could be strategic. Both could be making decisions on investments. Investment is not made by one person. Investment. So the way the process works is a company comes to you. It could be any one of the partners or within our group of board of directors or investment advisors. Depending on who they are, we put them in a bucket, yes, no, maybe, and then bring it up to the next level where the partners look at this, do some diligence on it to see if there is a fit, if it fits within the mandate, if there is a need in their sense for that kind of a company, and then moves it beyond that. And if it's still a yes, it moves to the investment committee. The investment committee is basically that looks at it and says, yeah, that looks like a good idea, because the investment committee and the board advisors also are relationship makers. So they might know somebody that would look at this company and say, oh, this is great. Let this company build to a certain level. It could be a great exit for a company or a great acquisition for another company. So those are the different, steps. And I'm simplifying it, but those are, there's a lot of other steps that goes in between. But these are the simple layers that go in to make the decision. And then is the managing director, who are really the partners, the full-time partners. They are the managers of the fund, and they're the ones that make the final decision.
But from the title, managing director looks like he's a guy who's not investing like the partners. Like venture partner looks like a guy who have invested in the pool of the VC from how I understand it, like how I'm looking at it as a title. So can you clarify that?
No. A managing director could be investing his own money alongside, or a managing director does have his own money in the fund as the early seed for the fund, or might not. It just depends. Every fund is different. But the venture partner plays a very similar role to the managing director, just simply doesn't actively participate in the daily workload, and can work outside the scope of the fund.
So he could be kind of a sleeping investor, something like that,
It could be, absolutely.
Consultant.
Absolutely. Yep.
So he's a higher level than the managing director. He's more as an investor than a manager.
So there are no hierarchies here, to be very honest. We don't see any hierarchical differences. It's more the role you play.
And both
defined.
Both don't receive salaries, and how the other roles works, like in the VC, like who receives salaries, who's not receiving salaries, what if they don't receive salary?
It's you could receive salary, you could receive percentage of the companies. So it just depends how the structure is made. Every fund is different. They do it differently.
So there is no standard for that.
There's really no standard.
Go ahead. What the other positions in the VC important was, like the main or standard positions that you find them in most of the VCs?
Standard positions? You mean roles people play? Well, board of directors, board of advisors, really mentors. Those are certain roles that.
And is there a marketing guy who go and, let's say, find companies or find startups? How do you find your startups? Or just startups apply and you just filter the applications?
Right. So the way we do it is we have a platform where the startups go and apply. It has certain metrics. It asks for certain questions. They have to fulfill those. They have to fill those. And then that comes to us. Depending on how we feel about it, we'll give it a yes or a no. If it's a yes, then one of the partners or somebody in the fund will make a call to the entrepreneur and then initiate a conversation to take it further. And if it's a no, obviously, nothing else happens. However, in the VC world, most of the deal flows come through referrals. So we get 8-10 deals per day, and there's no way we could look at all those deals at one given day. Some of those deals come with a whole business plan, so we use a platform to kind of filter out those things. But when we see deals that come through referrals, the referrals know us, what we're looking for, what would make us, put a check mark on the box. So we kind of respond to that more efficiently than not. So most of our deals do come through referrals, and it continues doing that. Don't forget, as VCs, we talk with all the other VCs as well. We talk with a lot of private equity people. We talk with a lot of entrepreneurs. We talk with a lot of I said private equity. We talk with a lot of attorneys. We talk with a lot of CPAs, accountants. So they all know what we're looking for, and a lot of those that just funnels. That's a funnel that comes into us.
What's the difference between a private equity and a VC?
A VC, by its very nature, is high risk. Private equity doesn't need to be high risk. A private equity could be money for restructuring, or money for roll up, or money for acquisition, and they would not invest in startups. They would not invest in early stage companies. Whereas, our DNA is to invest in early stage companies or venture companies.
How the accelerator works, and how much you're investing in the startups, how much you take equity in exchange for the investment in the accelerator?
Well, accelerator. The way the accelerator works is, it is a company or a group of company. They apply to us. We look at, and again, most of the accelerators work the same way. There's no difference. The technical or the mechanics or the percentages and the amount of work that the partners put in or the mentors put in are different. Otherwise, more or less, they all follow the same formula, which is companies apply to them based on what they feel. And it's not necessarily any segment. It's a certain industry. It follows a broad industry. It doesn't have to be a vertical. They invite those companies which are at a concept stage, really. And the idea is to take that company from a concept stage with 2 or 3, founders or management people to an MVP level, which is a minimum viable product level, very quickly, within 3 months. And the idea is to take it to that level to basically
like mentor them and make them prepare to more prepared than
to get them to the level where they're ready for key investments or ready for bigger investments.
How new startups can pitch you? Is it still works like if they submit a simple Excel sheet realistic to you, or it has to be a full projection business plan and feasibility plan for the investment?
None of that is needed. It's very simple. You have to submit 1 page, maximum 2 if you really have to, but 1 page executive summary, which talks about your industry, talks about what are you disrupting, it talks about how you're disrupting it, talks about how you're going to make money, and talks about who is in your team. That's it.
Is that for both the VC investments and the accelerator, or you're talking only on the accelerator?
I'm talking about VC investments.
So
accelerator is also more or less the same. That gives us a very clear understanding as to who you are, what industry you're going after, whether that industry is ready for disruption, and if so, what kind of market it's going to address. We call it the TAM, total addressable market.
But it has to be a disruption thing or something. Maybe someone has a business for a couple of years, is working, making some numbers, and wants to submit to you like a projection for that, and he's not disrupting he's just making money on a certain level, and he wants you as a VC to.
Yeah, that's not a VC investment. That's more a private equity investment.
But you don't accept such investments?
No, we would not. We are, again, certain companies, there are different stages of investments in the VC world. You have early stage, you have expansion stage, you have Series A, B, C stages, D stages, you have the later stages. Maybe a later stage would do it and roll them up into a public offering in that sense. However, a VC by very nature would only take where their investment and their mandate supports it. And a company that's making money and making a whole lot of money, has never taken money, never taken investments, would be more suitable for a private equity play.
What is the usual structure of a VC company?
In general, most of the VC companies in the developed world is a GP-LP structure, which means a general partner and limited partner structure. Elsewhere, it could be a holding company as well. I know in the UAE, they use a holding company structure. But here we use a LP GP structure, which really means 80% of the profits go to the limited partners, 20% come to the general partners. General partners are the managers of the fund. They make all the investment decisions, etc. And the limited partners, by the very definition, are limited as investment partners of the fund.
So the pool of the money gets 80% and the managerial team get 20% of all the investments that you make.
All the profits.
All the profits. And the managing team will not share the loss in case they are just only managers, not pool players. They just take 20% of the profit.
They take 20% of the profit. All the losses are borne by the limited partner. They are the financial ventures, financial partners into the venture.
What's the investment sentiment in the US today?
Today, well, let's see. 2014 was a fantastic year. It was a banner year for venture capitalists. I think we closed 2014 with about $48 billion in investment capital. And that was invested in about almost, I would say, 4,400 companies, all different stages. Most of them were in the expansion stage, then came the early stage, and then the later stage, and then most money was taken away from seed stage, which I mean the least amount of money, flowed into seed stage funding. However, first-time funds, or not first-time fund, but first-time funding by companies were the most received from the VCs, most of these were in the software side, internet specific side, and a lot went into the media entertainment side. As a matter of fact, media entertainment, there were almost 6 billion that went in.
How, like, you work in your company as well as consultants or advisors to some of the startups. So how you advise the startups to exit? Like, you guide them to certain companies to buy them out, whether it's the companies that you invest in or the people who comes to you for an advice. How you advise them or teach them to make a plan to exit?
Well, we just don't advise to an exit, in the sense we invest, and then we want to make sure that the investment is worth something. There's a return to the investment, and the return to investment could be, in a variety of ways, being, a public offering, being acquired by somebody else, or it could also be, it could also mean that it gets taken over, not taken over, but invested at a higher level from the level you've invested in. So, and you could exit at that level. So, so those are the ways we plan those exits. As far as the companies are concerned, we want to make sure that there is a natural fit for some sort of an exit. Every fund that invests in a company is looking for a terminal value. So if I see a company at $10, and I say, well, this company in the next 3 years could be $100, we will value it at a certain point and build the company from in terms of strategy, in terms of product validation, in terms of building relationships, and take it, kind of create a roadmap, if you will, to take it up that road.
How do you value a company with no sales? How do you put a valuation for it in general?
That's a venture capitalist, forte, so to speak. Unfortunately, having said that, I say that in tongue in cheek, but it's not an exact science. It's more art than science. If we look back, Internet 1.0, there were a lot of companies that were funded for millions of dollars, based just on a certain concept. I think Internet 2.0 has learned the hard lessons, and today we just do not want a concept or an idea. Ideas a dozen. If we want to make sure that the management team has done it before or has, and we vet the whole process. We check the background, we see, their experience and everything else, their educational background, their experience. What have they done before? Who have they worked with before? How many times they've failed? By the way, a lot of the entrepreneurs that come to us do fail or have failed in the past, and we see that as a badge of honor. It's never a bad thing to fail. If you have failed and have not learned from your failure, now that's a bad thing. We always think an entrepreneur is tenacious and an entrepreneur is very, very resilient, and they learn from the failure. So we like supporting some of those entrepreneurs, and we ask those very tough questions. So we base our investments based on who the entrepreneur is, what market idea it is, how are they going to build that business, and what market are they going to serve. Those are some basic questions that leads us to a certain value number.
Another valuation question, like how do you value a company with 100,000 like annual sales and with 20% profit, being there for 3 years, with like 10% growth per year? How do you value that?
Right. So let me answer it a little differently. I mean, value a company with $100,000 in sales is nothing. I mean, that's very, very small. However, let me take the sales number out. But if a company is growing 20% profit and 10% growth, the profit looks good, but the growth doesn't look very good. For a new company, we need more growth. Every industry is different depending on what industry you're talking about. If you're talking about a software industry with that kind of a growth, you might get a 3x, means a 3 multiple of your profit number, whatever that is. If it's a manufacturing company, you might get a little less because virtue of the fact there's a lot of capex cost. Today, what's happened with technology though is very little money can take you to a level where you know if a company can make money or not, or can sell a product or not. Without giving you sales numbers with $100,000, all I could say is the value depends on the industry. Value depends on what future growth they can have and what future numbers they can make. The growth factor is very important. For a new company, you should be growing at least 50% year over year, if not more.
What's your success rate? Like every 10 companies that you invest in, like two succeed or 4, or what's the success rate? Yeah,
so the general rule of thumb is out of every 10 companies, and this is a general rule of thumb for VCs, some do better, some do worse. The bigger ones so far have been doing worse, unfortunately, and there are reasons for that. However, 20%, so 2 companies out of 10 do well. They do really, really well. That makes up for all the other 8 companies. However, out of the other 8, 4 fail. So we have 4 left. Out of the 4, 2 do okay. They just kind of return your money, and then 2 do
struggle
above par. Nothing significant above par. So that's usually the kind of mix. And again, that changes. I mean, it's not a hard and fast rule, but that's usually how over a period of time, if we look at history, historical numbers would support that.
What are the most successful startups that you invested in?
What are the most successful startups? We are an early stage fund, so I don't think I'm qualified to say that they are very successful. We've been around for 2 years. If you ask me this question in the next 3 years, maybe I will have a better answer for you. But let me say this though: some of the companies that we've invested in have had up rounds, which means they've had other series of investments that have come in at a much higher valuation from where we invested. So on paper, we look very good, but paper being paper, is not really the number we should go by. When you really exit is the number we should look at. And so out of the 8 companies that we invest in 2 years, we've had 2 exits so far. One has been significantly good, which is 2.5 times in about 14 months. The other one didn't fare well, but that's the general trend anyway.
From the US, then you expanded to Korea. You opened a branch there. Why is that?
Well, it's not that we opened a branch there. It just so happened that we had a partnership. We had a relationship in Korea. Actually, one of my partners had a relationship in Korea, and they were very close to the market sentiment, and they were very close to what the government was looking to do in Korea. And what the government was looking to do was looking to allocate a huge amount of money for startups. So we took that opportunity, formed a joint venture with this partner, and started looking at some of those opportunities. Those opportunities were basically opportunities that were supposed to fund Korean companies, innovative Korean companies, to kind of build the next generation of companies. In Korea, we know, there's some very branded names such as Samsung and LG and Hyundai, but there are tons and tons. Korea is very tech savvy. There are tons and tons of companies out there, very smart people, and has 90% broadband penetration, and it just made sense for us to look at that market. And I'm happy to report in the last 1 year, we've invested in almost 10 companies. So this came about really, the Korea thing really came about because of 2 things. One is people on the ground, our partners on the ground there, and the government push towards the startup ecosystem.
Why you are thinking to expand your presence to the Middle East?
Now you come to the crux of the question. Yeah, I'm very interested. I've been traveling to the Middle East since '96, really. However, during the downturn, I saw there was a lot of turmoil that went around in just not that area, but all part of the world. Middle East, obviously got affected as well. And once the market started coming back, once the sentiment started coming back, I knew there was a gap that needed to be filled. There is an ecosystem there that needs further nurturing. There are entrepreneurs there with great ideas, and very little audience to share it with. But I know the process has already started there. There are some locals, there's some family offices, but much more is needed, especially from regions such as the West, where we have deep experience and we have market intelligence to mitigate some of those startup risk. And so right now I'm having several conversations with family offices, and I'm curious, who are very curious with what we are bringing onto the table with our concept. And I'm having very serious discussion with high net worth individuals as well, because I really see there is a need from, there are accelerators in the Middle East, but a little different from how I would rather call them incubators. They're trying to incubate companies. Incubation of a company takes much longer than accelerators. We like accelerators better because within 3 months, we know whether that company is going to work or not. We invest very little bit of money, get a good percentage of the company. So if the company succeeds, we make very good returns. If they don't, we have not lost too much money. The mantra of, fail fast, fail cheap applies here. But
do you think the VC companies coming to the region mainly for the ecosystem, or because there is a huge money here and high net worth people that they want to, add them to the pool of their money? And Oh, by the way, they invest also in the Middle East.
Yeah, well, actually both. Honestly, obviously there is an appetite in the Middle East. I'm not going to speak for why other people come there. I spent all of last year in the Middle East. I traveled there maybe 4 times or 5 times. I've lost count now. And I spent months talking with people, looking at what the ground realities are, looking at what is needed, and talking to entrepreneurs really. They are the people who we are looking to fund. Whether they have ideas, whether they feel there is a platform that is needed, and that is something that was really needed. So I spent the whole year discovering the process in the Middle East.
In Dubai or other cities, and what are the challenges that you have seen for the VC and entrepreneurship?
Right. Let me just. I'll get to that. Let me just finish this thought really quick. Like what I said. There are processes that have started already. There isn't really any big VC there per se, from the developed nation that's looking at the Middle East, because there's no platform. There are no serious companies they want to look that they can invest in. VCs would not just go to a place just for the sake of going to some place because there's money. Money doesn't make companies only. These entrepreneurs who understand what the market needs, understand what the market needs to fill, is what makes it. So what I am, so like I said, I'm not looking for what other people are looking to do there. My goal really is to set up a flag there with one serious or two serious anchor investor that believe in a vision, that understands how this is going to play out. And I totally believe that once we get the ball rolling there and become visible, start branding ourselves, we will not only attract other investors from the region, but I strongly also believe that corporate VCs from the US will buy into the platform, because right now there isn't anything. So that's why I keep talking about building the ecosystem, because till you don't build the ecosystem, entrepreneurs would not know what to do. They would not know where to go. Okay, we have accelerators there that are more incubators, but they're more really a real estate play, because the way the legal system is built there is you have to have a license to do business. And the only way you can have licenses if you are housed in one of these units. But these units, I'll name In5, for example. They are in a process of learning, and again, supported by the government, in the process of just not providing real estate to the entrepreneurs, but also providing certain knowledge-based classes to these entrepreneurs. That's what the entrepreneur needs. How do I do this? Once I have reached a certain, I'm an engineer. I've reached a certain process in the engineering field. How do I take this to be tested? How do I take this to the market? Those are stuff that needs to be, taught, and that needs to be, delivered. And as a venture capitalist, we've done this day in and day out, and I'm planning to build that platform there and bring it there. I'm sorry, you asked about the other question. I kind of redirected you.
Yeah, I wanted to ask, have you visited other parts of the Middle East or only Dubai? And what are the challenges that you have seen for the ecosystem, for the VCs, for the entrepreneurs?
Right. So I have traveled to Abu Dhabi. I have traveled to Sharjah and Dubai right now. I'm coming next month. I'm planning to go to Oman. I'm planning to hopefully look at other regions as well, maybe travel to Saudi as well. That all depends. I would like to first create a hub rather than, by the way, I have relationship in all these different places. And I would like to create a hub first in one place, which is, popular by, or popularized by all these different regions. Everybody from that region does come to Dubai. So I would really create a hub there first and then expand elsewhere, and more like a hub and spoke kind of a model. what are the what are the challenges? I mean, the VC asset class is just not understood in the Middle East. The regional money is still not well diversified. People are still investing in oil and gas and real estate. Again, they understand that it's a touch and feel. It's a more of a cultural thing where it's a touch and feel. And I understand that more than anybody else. I'm from the Indian background, and there's a touch and feel there too. Till they don't see something or can't touch something, they don't think it's worth anything. And look at Facebook. I mean, can you touch and feel Facebook? It's worth $200 billion. So technology investment has happened there, but the underlying theories is still a mystery. Hence, those bridges need to be filled. And I see them changing very, very quickly. The mindset has to change. The question of, yes, I will invest with someone other than my family member. Those mindsets have to change. Professional investments have to be more the underlying theme rather than just family investments.
Don't you think like the internet world is very overrated, and it's because it's very competitive? Like the failure rate in the internet world is much higher than investing in real estate or in the other stuff, because even if you choose a niche, you still like competing with the entire world instead of competing with a location or a mall or a neighborhood. So do you think the tech, especially the tech startup world, is a bubble basically?
Yeah, don't we hear that every day? It's difficult to say if it's in a bubble, and I'm not being evasive. I really mean it. The bubble world really came once we had the internet bubble 1.0. And as I explained earlier, the 1.0 really happened because everything was concept. People really didn't understand what they were investing in. They were just investing because it sounded right. A lot of things have changed since then. Now we understand more. I wouldn't say we understand fully, but we understand more than what we saw 10, 15 years ago. The bigger difference, however, is these companies are making money. They are revenue generating companies. Look at Google, look at Facebook, look at Twitter. I mean, you can argue, but hey, why are they valued so high? It's a demand and supply question rather than a bubble question. But the difference is these companies are making money. So there might be, I wouldn't call it a bubble. There might be a downturn, but that's very healthy. Anytime it gets overheated, it cools down. So without getting to the bubble discussion, which I think is maybe a 2-hour long discussion, I would say it's not really a bubble per se, but I would probably concur with the sentiment that it's probably a little overheated at this point.
In the new investing ecosystem of the Middle East, what's your advice for the entrepreneurs in the Middle East to raise capital?
Build a product. Build a product that is required, which you feel there is a need. And when I say disruptive, I don't want to use the term loosely, because really you have to build a product that is required in the market. Don't build something that we don't need. Look at some of the disruptions that happen. Get an idea from it. We've all heard of Airbnb. We've all heard of Uber. We've heard of obviously Facebook and WhatsApp, and just name. These are certain disruptions that have happened. So what I would advise is introspect into what you're building. Make sure that it is a product or a service that is needed. Once you feel that you serve that purpose, then run with it. Do not listen to anyone at that point. Then run with it. But because your passion, it's very difficult for an entrepreneur's passion to be replicated by an investor or anybody else, for that matter of fact. So if you, in your hearts of hearts, believe that it's going to be successful, and you are filling those gaps, go with it.
So how is your daily life and work routine look like with your hobbies as well?
Okay. Well, no day looks the same. It's looking at what has happened, while you were, offline, or you were on radio silence while you were sleeping. There always seems to be a breaking news in the tech world or in the financial world. Then there are meetings with portfolio companies, potential companies, a whole lot of diligence both on macro and micro analysis on companies, interacting with current and future investors, attending trade-related events to network and learn more about new trends, offer opinions, have discussions. So it's a very people-related work routine.
Who are your top three mentors?
Wow. Top three mentors. I would say definitely it would be Warren Buffett. And again, in no order. But Warren Buffett, obviously, for sustaining his investment thesis for so long, by taking a very simplistic approach to investment, not complicating it at all. I would also consider Steve Jobs, for being creative, being a creative mind. And that's what I was going to say. He provided to people what they really needed. Not that what he thought they needed, but what they really needed, and without compromising quality. So, I would consider him a mentor as well. And Elon Musk, his vision, his visionary, his tenacity. Look, he's doing Tesla, space station, solar city, and now Hyperloop all at the same time. I mean, I can't manage one company. He's managing, 4 or 5 of these huge enterprises. So absolutely mentors for me.
What's the biggest failure moment in your life and what did you learn from it?
Well, since there have been many failures, but since we are on the topic of investments, let me give it an investment related answer. So the biggest obviously was making investments based on other people's belief and analysis, and not spending enough time to kick the tires yourselves. Doing a lot of diligence. Depending on other people's analysis to make investment decisions. That led to a lot of failures. Now, what I learned from it is I personally look at certain analysis. I personally go and kick the tires if I have to on investments, and then I depend on a very strong support system that adheres to the same principle and the values that I believe in.
What are the top 3 apps that you use on your smartphone?
So it's top 3
Apps.
Oh, top 3 apps. Well, there are a billion apps out there nowadays. And if you ask me this question, maybe 3 years from now, I might have a different answer.
No,
But
I mean top 3 apps that you use on your smartphone
on my
personally.
smartphone, right? So I would say LinkedIn for work related, especially to connect with people. Skype for platforms such as what I'm doing now, and then WhatsApp for my social interaction with folks I'm socially connected to. So it'll be LinkedIn, Skype, and WhatsApp.
What's the best advice that you have ever received? And another similar question, what would you advise your younger self, if you have the chance?
What would I advise my younger self? I would advise my younger self to focus, focus more on a single plan, and build that really well, and save a lot of money. I think my mother and my late father would be happy by by me saying that. But that's really the truth. I would focus more on certain certain way I have looked at opportunities.
Top 3 favorite books.
Top three favorite books. I love reading. So, I really feel anytime you're reading, it's time well spent. So, if you will allow me, I would like to separate the top three reading into two categories, really. One is leisure reading, and the other would be, technical knowledge-based reading. And actually, I would break that down even further and maybe do biography. So I'll just give you very quick names. So I would say like Catch 22 by Joseph Heller was a fabulous book. Godfather by Mario Puzo was a very wonderful book. Love Story, again, what a combination. Was wonderful. Again, I'm dating myself a little bit, but that was such a fantastic, moving book. On the biography side, any personality, really. I mean, Warren Buffett, I mentioned, Steve Jobs, Eric Clapton, great reading, great reading books. And on the not, it's, anything to do with investments, Intelligent Investor by Benjamin Graham or Peter Lynch or John Templeton. They're great reading stuff. And so I have a huge list. So it'll be unfair if I just broke it down to three.
What are the habits that you're trying to develop to stay efficient?
What a time management. As you know, I came to your meeting a little late. I have a very difficult time saying no to people when they ask for meetings. Very difficult time in cutting them off when I know I'm going over time and wasting time on conversations which really means nothing. So I'm trying to focus more on time management and follow a certain agenda. And know when we are wasting time, when we are really, using time to our advantage and benefit.
So you struggle to say no to people?
Well, as human beings, we all do, right? As human beings, we feel, hey, they've come to us for advice or they've come to us for certain questions, why turn them back? But at times you have to kind of, you have to, dig your heels in the sand and say, well, let me get to it later.
What makes you really happy?
What makes me happy? Well, what makes me happy? What makes me happy is, I guess, seeing my children at the end of the day. That I have two young kids. Well, actually, not that young, 17 and 13. That really makes me happy. We have a wonderful relationship. And we have a really wonderful family, my wife and my two kids, and, spending a lot of time with them. I'm a family person, that really gives me, it really relaxes me, so to speak. What else makes me happy? I'm an outdoors person. I love playing golf. I love meeting people, having intelligent conversation with intelligent people. Those are things that kind of recharges my cells.
Last question, how people can contact you and when you are opening an office in Dubai, or they just can apply on your website?
Well, they can, for now, they can send me emails to my work ID, which is S Majumdar, SMAJUMDAR at dev.vc, and that's Digital Entertainment Ventures NY.vc. So they could send emails, but I'm planning to be there next month. If you'd like to coordinate and take some names down, if they call you, I would love to meet with them. All I'm trying to do is build up a pipeline, build up relationships with entrepreneurs, build up relationship with potential investors, and build up the ecosystem, because I really feel there is this need that we could fill. We'd love to be pioneers. We'd love to be settlers there. We'd like to do something for the region. And there are a lot of, groups, families, individuals here from that part of the world that would love to do something for the world, but they don't know what to do. They are at times overstretched on the real estate or overstretched on the oil and gas projects. They would love to do something else. They would love especially their second generation, their kids understand technology like nobody else. They would love to partake in some of the ventures that's happening. So I'm very excited, to spend the next 2 years building this project, and I'm looking to partner and help and get assisted by folks who are local on the ground there.
Thank you so much, Swatick, for this interview. Really appreciate your time.
Thank you very much, Ahmed. I hope I did answer most of your questions, and you have a wonderful night. I know it's a very late night for you right now.
No worries. Thank you so much. Thanks, everyone. Be efficient and stay efficient, and see you soon with another leading expert.